Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. At present, the downside pressure has not subsided for the Australian dollar as the bears continue to pressure the 7-week low, which is around 68 cents. And also a key point. Meanwhile, the US dollar, which measures the greenback strength against a basket of 6 major currencies, edges higher around 104. In economic data overnight, according to the US Labour Department, the US grew solidly in the fourth quarter, following the government's second estimate for the fourth quarter GDP, which was downwardly revised to 2.7% compared to 2.9%, which does reflect a weak consumer spending and higher inflation figures in the final 3 months of 2022. Looking ahead, eyes look to the Fed's preferred measure of inflation, which is the Personal Consumption Expenditures, or the PCE, due out Friday. The forecasts expect an annual inflation rate of 4.3% in January, down from 4.4% in December, while the core PCE inflation rate is expected to ease from 4.9% from 5% the previous month release, that is. So looking at the technicals, we're a little bit mixed here as we do challenge the level around 68 cents. But I do feel that the market has weakened this level and therefore the bears are likely to see the challenge towards the region of 66.50-70 with an intraday cap seen around 68.5. Looking at the euro, the market remains somewhat negative as we see a further slide on Thursday as the dollar index, which measures the greenback strength against a basket of 6 major currencies, refreshes its 7-week high around 104.50. In light of the pattern, we can see that the ADX is still holding to a bear case and the married technicals to the RSI MACD are negative too. So with the level taken out of 106.20, now reveals the region of 105.15 as the initial target. The dollar yen was a little bit mixed as the Japanese central bank nominee speaks before Parliament and noted that the long-standing monetary easing policies are appropriate, which may suggest that there is or likely to be no change in the bank's stance when the Bank of Japan's new head takes the helm in April. Looking at the technicals, I feel there is still much bullishness in play here and therefore looks towards the region of 136. Now, if we see a break of this level, it does expose the next target, which is somewhere around 140 to 142. At present, I'm keeping a close watch on how these technicals are performing for the sterling, as it is, or presently appears to be picking up, and therefore may see a rise up towards the region of 120.70, and maybe even holding to its trajectory of around 121.40 to 122. Any dips? Well, the market still respects this level of 119.45, and any challenges should again draw a bullish response. Now falling closely into the second weekly negative pattern here, the market has now presently pressured the level of 1,820, which may break, and therefore would reveal the region of 1,786 to 89, which I feel was preferred due to the heavy technicals and also an ADX that's trending to a bear case. Any upside attempts may find resistance around 33, but a cap around 1,845. Finishing up with oil, I'm not overly won over by this current rally and therefore could see a failed attempt to the upside or rejection anywhere towards $77 a barrel. If so, may find the move back towards the bottom side, which was closely challenged around 72.40.60. Well, that wraps it for the week. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the great start to the new weekend.